Hey guys, how's it going? Lewis Harding Invest here and welcome back to my channel. And in today's video, I'm going to be going through 3 stocks to buy now in September 2021. Let's get straight into it. So the first company on my list is BAE Systems. So these guys are a British multinational arms, security and aerospace company based in London. The company is the largest defence contractor in Europe and one of the biggest defence companies in the world. It's the third largest based on applicable 2017 revenues. So the bigger ones include like Lockheed Martin, BAE Systems, who else? General Dynamics, companies like that. There's a lot of decent sized ones in America, but BAE Systems is the biggest one in Europe. Anyway, so the largest operations are in the UK and the United States, and it is one of the largest suppliers to the US Department of Defence. And it's probably well known that US has probably the largest defence budget in the world, a very, very juicy budget. So these defence companies get a lot of long-term contracts, which is always good. They also have other major markets, including Australia, India and Saudi Arabia. And it's the biggest manufacturer in Britain, so that's a fun fact for you all there. Now let's have a look at my newly improved analysis checklist for BAE Systems, and the market cap £17.6 billion, a decent size for a UK company. Now on to pillar 1, decent gross margins, very solid. Net margins don't quite make the 10%, which is unfortunate, but luckily for us as investors, they are very consistent margins, which is always good to see. High returns on equity, really good long-term debt to equity ratio, a very stable figure, and a good current ratio. Good stuff, so it passes out one clearly. Proven ability to grow, revenue growth, net income growth, shareholder equity growth, all positive. Unfortunately, free cash flow growth is actually down, but that's probably a little bit of an anomaly by looking at the figures. Great capital allocation, so how are management repaying shareholders? They are repaying the long-term debt, they are increasing the dividends, but unfortunately they're not actually decreasing the shares. These have increased slightly. This is likely to do with employee stock options and probably raising capital during COVID, most likely anyway. Good acquisitions, they seem to make good acquisitions which add value to the business, so great stuff. Buy at a fair price, the most important pillar. P ratio below 20, so yeah, 10, fantastic. This is what attracted me to this stock in the first place. And the price to free cash flow ratio is a bit different to the PE. You usually see these very similar, but this is probably due to an anomaly. DCF valuation for a 10% return on looking at a share price of £6.20. Now let's have a look at my DCF valuation model for BAE Systems, and for a required rate of return of 10%, I'm looking at a share price of £6.20. So using fairly reasonable free cash flow figures going into the future, looks pretty good at these prices. A return of 10% in this market is very decent. The only reason I haven't bought this stock is because I can't buy it on freetrade yet. Stocks which require national declaration forms, you can't buy them on the platform because we don't have the ability to do that yet. So hopefully we get that soon, because I'd like to buy this stock potentially at current prices. So interesting stuff. Next up on my list is Rio Tinto. So these guys are an Anglo-Australian mining company, and we are the second largest mining company in the world. They produce all sorts of commodities such as iron ore, copper, diamonds, gold and uranium. And they're dual listed, so they're listed in the UK and Australia. So they're a very, very big company. And yeah, what can I say? I've done an individual stock analysis on these guys, so check that out if you are interested. But let's have a look at the analysis and see what it spits out. Now onto my analysis checklist for Rio Tinto, and market cap £86.5 billion, so one of the biggest on the FTSE 100. And yeah, onto pillar 1. So smash this out of the park really. Solid gross margins and net margins, high returns on equity. Really, really good to see. A very low amount of debt compared to the equity, so very, very manageable in case commodity prices go down and they don't make as much money in a couple of years. Current ratio absolutely solid as well, so a lot of liquidity in the business, awesome to see. Proven ability to grow, so revenue's growing, profits are growing, shareholder equity is growing, and free cash flow is growing. What can you say? Awesome stuff. Great capital allocation, so they're repaying long-term debt with that free cash flow, paying dividends and buybacking shares. All good stuff, and also acquiring businesses as well in the mining space, so great to see. And what makes it even better, buy at a fair price. At current prices, it's looking a very interesting pick. So P ratio is very, very low. This is mostly to do with the current commodities boom. Mining companies have been making a lot of money recently, and this is probably going to die down. So the P ratio is probably not one to look at for this one, and the price of free cash flow also reflects that. DCF valuation for a 10% return, I'm looking at a share price of £62, £63. Let's go to the DCF and show you how I got to there. Now onto the DCF valuation for Rio Tinto, and for a return of 10%, we're looking at a share price of £63, £63 per share. Yeah, you can see from the free cash flow that 2021, that figure is a lot higher than the other years. Due to the commodities boom, the commodities prices are likely to come down slightly going forward. Well, you'd think so anyway, and they'd come back down to more of a stable level. But even so, there's a lot of cash flow coming off this company, and the management are doing some really good stuff with the cash, buying back shares, paying dividends, paying off debt. What can you ask? What more can you ask for? For a reasonable return of 10%, this stock is looking very attractive. So it's one reason I own it in my portfolio, really. So, great stuff from Rio Tinto. Now on to my third and final stock pick, which is British American Tobacco. So these guys are a British multinational company which manufactures and sells cigarettes, tobacco and other nicotine products. The company was established in 1902 and it's headquartered in London. As of 2019, it was the largest tobacco company in the world based on net sales. So they have operations in over 180 countries, and they have all sorts of cigarette brands. They have a primary listing on the London Stock Exchange, and one of the biggest on the London Stock Exchange as well. Now let's have a look at my analysis checklist for British American Tobacco, and the market cap is £61 billion, so a fairly decent sized UK company. First pillar, so high gross and net margins. You do find this with cigarette tobacco companies, high returns on equity as well. And what's good about this company is the long-term debt to equity is a fairly manageable figure. The debt looks quite high in comparison to some other companies, but the company is very big and it does produce a lot of cash flow to pay these off over time. The current ratio isn't one. I think this is a sector-specific thing as well, so I wouldn't look into that too much. Proven ability to grow. I think we need to take this with a pinch of salt. So they're all in the green, as you can see. They look very impressive. But what's distorting these figures is a few years ago, they made a major acquisition, Newport Cigarettes, I believe it was, and this has, increased their figures a lot. So revenue's up, net income's up, etc. But because they've acquired it, that's why it is what it is. It's not like they've organically just increased everything that much. Tobacco companies aren't growing that much; they're just growing alongside inflation. Great capital allocation. So like I said, acquisition, paid for the acquisition with debt, so the debt is up like 29 billion. Bad to see, but they've used the debt in a way to increase other things, increase the business. Dividend growth. Tobacco companies are well known for having high dividends to attract people to the stock, so that's clearly up. Decrease in shares outstanding, we've actually been increasing shares. This probably relates to raising capital for acquisitions as well. Good acquisitions. I would say that acquisition was a good one. If they are increasing the revenue, net income, shareholder equity, free cash flow, it's clearly a success. If they were in the red, it would not be a good acquisition, but because we're all in the green, I'd say it has to be a good acquisition because we've increased everything and the business is ticking along. Buy at a fair price. So P ratio is nearly 10, and the price of free cash flow is fairly low as well. And you do find this with a lot of tobacco companies, that they are being suppressed by the market because people think they're just going to go out of business sometime soon. Anyway, yeah, so for a 10% return, I'm looking at a share price of £49, and from the current stock price, it's looking quite interesting, an 83% uplift, and the Lewis score of 81%, so I'm clearly happy with this stock. As you'll know, I've owned this stock for a while, and it is really interesting. But let's have a look at the DCF valuation to see how we got to that figure. Now let's have a look at the DCF valuation for British American Tobacco, and for a return of 10%, like I said before, I'm looking at a share price of £49. So from the current share price, it's looking rather interesting. The free cash flow, very, very consistent, and it has been for a lot of years, and a good number of years it's been consistent, and I expect this to continue. And with a juicy dividend, it does make the stock attractive in my opinion. The market has been underpricing tobacco stocks for a while, in my view. I think it's due to ESG reasons, like they're just not attractive stocks to own because we all know what cigarettes do to you. They're not good for you at all. But a lot of people think the tobacco industry is just going to die out. I personally don't think it's going to be as quick as everyone thinks. They've been saying this since the 90s, that cigarettes are just going to die out. But in emerging markets, the amount of people smoking is actually growing, and British American Tobacco probably has the biggest emerging markets exposure to cigarettes, so that's why I think they will keep on tick along well. And yeah, this is why I own the stock. Dividend yield of 8%, and I think it's undervalued, so I'm happily enough to just sit and take my dividend whilst this stock hopefully comes back to its fair value at some point. I don't expect it to get to a high PE, not even the market average, because over time this industry probably will decline. But overall, I do think these companies are being underpriced by the market. So there we have it. They are my 3 stocks to buy now in September 2021. So let's go through them again. BAE Systems, Rio Tinto and British American Tobacco. So I hope you enjoyed them picks, and I hope you find them interesting, and do some more research yourself into them. Don't just buy based on what I say. Don't just buy stocks based on what people say on the internet. Do your own research and invest for your own reasons, of course, and you can read my disclaimer down below. If you are interested in more investing content, then go over to Patreon. I've set this Patreon up for $5 a month. You get direct access to me, you get to chat to me, live streams, exclusive posts and stuff. Discord server, honestly, it's really, really good place for a budding investor. And you get to see what I'm looking at investing in, and my investing watch list, which is only available for members. If you enjoyed today's video, please leave a like and a comment, as it really does help me out. And if you are new to the channel, please subscribe. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos